Very good morning to all of you. So we are about to start our first technical session. We have with us none other than Mr. Pradip Kapasi, who is an icon of our profession, a great stalwart when it comes to tax laws. He is a senior chartered accountant, law graduate, and past president of BCAS, heading the Mumbai-based firm Pradip Kapasi and Company. He is a renowned author, educator, and thought leader in taxation with decades of experience addressing professionals and institutions across India. May I request our president, Neeraj Harodia ji, to please join on stage, present a Uttorio. May I request E. Mehak Buteria, please join on stage to present a memento to sir. May I request Ajay Patodia ji, Ajay Patodia ji, Ajay Patodia ji, to please present a coffee table book to sir. Friends, I must tell you, having heard Pradip Kapasi ji for the last 2 decades, he has unparalleled knowledge when it comes to interpretation of law. So, just 2 minutes before I hand over the session to Kapasi ji. Sir, when you were reading the Income Tax Act 2025, over the last 6 months, when it started with the bill, we understood that there is no fundamental change when it comes to, sir, as I was telling, when we were reading the Income Tax Act 2025, since the day it came as a bill, then the report of the Select Committee, it was our understanding that there is no major fundamental change in the Income Tax Act 2025. But when the bill became a law to be enforced with effect from 1st April 2026, and we were reading each and every part, each and every chapters of the Act, and were comparing with 1961 Act, we find at various places, there are differences in language when it comes to the definition. And when I talk of the definition, maybe the definition of maximum marginal rate, block of assets, definition, concept of resident, non-resident, and when we slowly travel, difference in allowability of interest on when it comes to house property, major differences when it comes to depreciation, what we found on our interpretation, and maybe you will throw much light on the mechanism of additional depreciation, concept of block of an asset, set-off of unabsorbed depreciation against income of the current year or past years. Again, law relating to deemed short-term capital gain and reinvestment thereof when it comes to block of assets. Manner of set-off of losses when it comes to the transitional provisions. If you see section 536, we have 2 separate subsections when it comes to set-off of capital gains and set-off of losses other than capital gains, which again gives some different interpretations as we understand, and sir will clarify more. So with this brief speech, I'll request you to kindly take the session.
Good morning to all of you. Mohit is a very dear friend, so therefore whatever he has said, you can safely discount that. The earlier part, when I said something about me is yes, but it's always a pleasure to be before you. So I have been in the past with you also. So and I have enjoyed in the past. And Kolkata is a place, contrary to the normal belief, is something I really look forward to come to Kolkata, because there could be multiple views about the city, but then I am the one who is a great supporter of this city and would continue to be so. So thank you for inviting me here. It's a pleasure. Yes, we are here to talk about the Income Tax Act 2025, and like 61 Act, before that we had a 1922 Act, which remained on shelf for about 40 years. This one remained on shelf for about 64 years. I'm not very sure, how long this new one would remain on shelf, for the reason that, one just thought that, then when you took about a giant exercise, massive exercise of revamping the entire law, okay, and which you have been doing it since 2010, okay, or 2009, obviously you would have put lot of thoughts and, efforts into it. But as it happens, the Finance Bill 2026, which Padamchand Kincha is going to talk to you about, you would see that, there are huge amendments in this act itself. Besides the Act of 61, which also will be carried, some amendments would be carried out. But here also there are numerous amendments, not less than 60, and they also are of vital importance. So one really is not sure that, with this exercise of ITA 2025, we have really, brought peace, or it would be something, it cannot be achieved. To me, as a student of taxation, I have always felt that Income Tax Act can never be stable. You know, if at all, if you're looking for simplicity, you should have some laws like what you have in UAE, or you perhaps have no laws at all, Then in UAE also, if you see the present corporates regime, it has become so complex, and the president here would have shared with you that it's not so simple anymore, The firms, the big fours were assigned to give the, task of, legislating the law as it would apply to UAE, that is GCC countries. And now we would see that, it is of a good quality, but at the same time it comes with a package, which is baggage full of issues. But having said that, it would be appropriate for us to not hunt for simplicity. It's better to understand. And it is the professionals who in our practice, can make it simple to our clients, with our approach, with our sincerity, and with our guidance. That perhaps is the better thing. And for that, the first step is to study that. And that is why we have met here together. Mohit very appropriately said that, yes, that we were made to believe that there are no changes at all. There are no changes at all of substance. There would be tinkering here or there, but there were no changes of substance between 1961 Act and 2025 Act. And largely one would feel that, if you talk about the process, if you talk about deductions, if you talk about heads of income, then you feel that, that the changes are decorative or ornament, but they are not so. That, this, and you find, and for once, I congratulate the government for the thought process which has been given into this shift. Besides what we are understanding, as professionals or tax practitioners about certain deductions or other things, but this act primarily seeks to introduce very important change, and that is that from an adversarial regime, the officers and the bureaucrats were trained to be suspicious all the time. As against that, you would see that, most of the process is now involved, barring malpractices. I am not here to discuss about malpractices, but if you appreciate the practices, there is a tacit acceptance that a taxpayer would be accepted, with some trust, and therefore, whatever he furnishes, that is something which will be respected and not doubted. So this adversarial outcome which was there, the approach which was there for so many years, would materially change. So that is one important change, which I notice. The other one is an absolute, perhaps excessive reliance on digital footprints. If you would see that, that in any chapter, there is a great reliance which has been placed on digital collection. And with that, related to that is, now it is not more driven by details, it is most of it is on the basis of the digital information which they would collect. And the assessments and the appeals would be decided on the basis of this. So these are the few changes which I believe are the major ones. As Mohit said, is yes, there are numerous changes, and therefore it would be humanly impossible, for anyone to identify each of the changes and thereafter deal with the nitty-gritties of it. Instead of that, what I have done is that, yes, that I have identified the major areas of change, explaining to you that these are the areas wherein you will have to look for that there is a change in section 6 relating to rule of residence. This is just an example I am giving you. So in spite of telling you that how it matters, what's important for me in a short time which has been given to me is to highlight that which are the areas which you should really look for. So that is one. The second assignment was also that which are the judgments, which we believe because of this shift from journey from 61 to 25, what are the judgments which may not be any more relevant or which have been diluted, ratio of which is diluted. I'll just highlight them, and then we will end with understanding that whether these precedents, these judicial decisions can ever be considered, can ever be considered as precedents and would be binding on the courts in implementing or administering the law of 2025. So this is what is perhaps, I am set about to do today. Let's see, how much we can deal with. This is the synopsis of what we are going to discuss, see what are the structural changes. So we'll skip this for the time being. No, okay. Yes. So what are the overalls? If at all at some point of time, if you feel that I am not audible, you may please tell me, so I'll try to adjust these things accordingly. What are the major things, see in the approach itself? You would see that, the language which has been used for 1961 Act, even the manner in which we represent or respond to the notices, see now, today in 2021, it's plain vanilla English. It's not complex structuring, whereby, say 5 sentences are interwoven into one clause, and then, you need to split them into different parts. That is no more done. You will no more have to derive the meaning from the tail for the head. So it is, each of them are separately structured, placed in short sentences instead of the large contextual text. So this is which I would believe is one of the major change. The second one is that, the language which was being used, see now also is what is used in 2025, I find it to be much modern, more not legal, and more simple. So this also, when we really apply our mind to that, is going to make a material difference. Why I'm emphasizing on this is that when we understand, when we seek to understand later on that, whether these judgments which we are talking about, and there are more than 10,000 decisions, okay, whether they would have any relevance or not. So I'm just trying to prepare myself and yourself also to that, how the journey would unfold eventually and how courts would also look into these. Then all clauses, see so far we had been used to, the numbers of the provisions like 80 JJAA and things like that, see they were endless, and within that also there will be clauses, sub-clauses, proviso, explanation. Instead of that, the attempt is made. How far that would be useful or successful, time alone would tell. But the attempt is made now to put them in all sequences. And that's why you have more than 500 provisions or sections. So this is one thing which we have noted, will note. Alphanumeric labeling is no more working. Then, and this is the one which we are now highlighting is a significant changes. That most of the time you would see that, that what exactly the provision means, it's very difficult to gather. And therefore, even courts at time have commented that yes, that to gather the meaning of it mathematically or arithmetically, there is a difficulty. And therefore, in such kind of things, interpretational issues galore. So to do away with that, now what has happened is that there is an extensive use of formulas, very clearly telling you A plus B means C, and what C would mean is not D. So this is one extensive use of formulas, extensive use of tables all across the length and breadth of the Income Tax Act. So this is something that whenever you have a doubt or a confusion, these tables and formulas will make it clear to you that what exactly how exactly the income would be computed or a deduction would be determined. So we'll keep that in mind. Provisos and explanations, we had about more than 1,000, perhaps 1,200. All of them in one single shot have been done away with. They have been bid goodbye. And what would be the implications of it? What was the need of the proviso? And what is, in the absence of the provisos and explanation, what would happen? These are the major areas which I seek to discuss today before you, instead of computing and telling you exactly that section 64 में क्या difference हुआ है. I hope that and even otherwise, even if I had sat about, time would not have permitted to this. Now today you have chapters, see earlier you had chapter assessment, and then somewhere elsewhere in a nook and corner, block assessment would be sitting, somewhere else interest provision would be sitting, somewhere demand provisions, and to sequence them into one place was difficult. The definitions also were littered all around. So now what is happening is that the provisions, chapters are put in a linear manner. Your association will start with understanding the charge of income tax, scope of that was there. What is deemed income, what is residence, will be followed by each head of income, assessment procedure, and things like that. So I believe that even when it has retained the approach, because the earlier one was not bad, but it is now very clear that it is sequentially placed. Definitions, there are about more than 110 definitions which have all been pulled in one place, and therefore one does not have to hunt for it. Mohit said that maximum marginal rate, now you need to look for maximum marginal rates definition at different places. So that is what is now not happen, and there could be many such cases which have now been placed in order. The next and very important is that there is now a judicial and not judicial, statutory acceptance of the faceless schemes. You would see that, so far from 2012 onwards, in some manner, these schemes have been introduced right up to 2024. And the issues have always been that what is the legitimacy of these schemes? How do they function? Whether they are, you have 151A, and the other day Supreme Court said that, we appreciate, the distinction between the jurisdictional officer and the faceless officer, and that now we are sending all the matters back to the High Court. Now this is what is the kind of, confusion which was prevailing in the aftermath of introduction of faceless scheme. So this is now, there is a statutory approval and acceptance. It is statutorily legislated that all schemes have origin in the law. And at some point of time we will appreciate that why it was so very important. Yes. Now procedural details, see, the act was cluttered with procedural details, see, it was painfully, explaining you that how you will do one thing after the another. All of them is now consigned to the rules and the notifications or the circulars. So what would happen is, because I have nothing against these procedural details being part of the Income Tax Act. The difficulty was that these details were being tampered with. Every chief commissioner or every board chairman had a different view about the procedures. And this was his short formula of doing something during his tenure. So what the procedures were being changed. You look at 148A, right? It was just introduced, aftermath of COVID. And thereafter, how many changes it has undergone? Yes, right. Even a simple provision like 148A, which was nothing but a pre-reassessment provision, we just laid down a procedure which was required to be followed before an assessment was reopened. So to do away with that, now it is consigned to the schedules, or it would be to the rule-making authority. There could be two doubts about it. I have a few more thoughts to share on that, but we can talk about it. That this is, I consider it to be an important shift. Gone are the days wherein, see that the assessing officer or his Johnnies would come to your place, will collect details, will inquire, will send you notices. Now all that would not happen. It's absolutely data driven. Most of the entire approach of the Income Tax Act is that officer is not to hunt for or look for or harass people in the name of collection of information. He has to, before he even initiates any dialogue, he has to be in possession of the data. And if he is not, I would believe that his superiors will take him for the task. So this is also an important significant change, that everything would be digitally driven, yes, and data driven. And data is not, that is what assessee would supply. Today what was happening was, under the 61 Act is that if they feel that you are rich, and if they are certain that you are rich, but if they know that you are not paying taxes, then they will come to your place. This is what it was, and that was intimidating, it was a serious invasion on privacy also. And many of the cases you would notice that at the end of the investigation, they were not in possession of any information at all, which would have led to crores of rupees of addition which they were making. So therefore what was happening was that there were forced confessions. Right? A person who had nothing to declare were made to declare and were made to pay taxes also. Now all this, I believe that, and sincerely believe that all this would end. These searches are going to be the areas of past. Only in major cases or politically driven, there would be searches. But other than that, once you are in possession of data, whether you go to a particular person to search or not is immaterial. It is immaterial. So therefore, in such cases, this also will make a material change. And slightly it is being seen. You would see that, yes, of late, I don't know about, but in my city, I've seen that the number of surveys have reduced substantially. You would notice that, yes, right, normally this is the season, February and March. These are the months in which the surveys take place and their targets are fulfilled. But that, I believe, would not be. The person will have to have some specific information in his possession. And the most appealing is that, there is now a legislated provision accepting that this is taxpayers' rights and duties. This is the officer's obligations. So that is taxpayers' charter also is incorporated in the Income Tax Act. So these are the structural overall I thought I would place before you. Now we will go to the specific things, legal part of it, so that we will understand largely what would happen is. You would see that there were more than 600 places in Income Tax Act 1961. We had clauses that were saying that, that notwithstanding what has been stated in one chapter or in one section or in one subsection, this is what would happen. The idea had been that, okay, that you have done something at a particular point of time. You had some rethinking about not that provision, but you have understood that, while introducing the new provision, you felt that the old provision which is already there might disturb the understanding of the new provision. And to do away with that, it was usual and fashionable in some cases to introduce, notwithstanding what has been stated in chapter 3. Here I mean this. This was to provide some kind of a primacy, to the new act or the new law or the new provision which was being done, and it was wonderfully working well. Now, at all places, because we have shifted to, I think, simple vanilla English, it was felt that, notwithstanding, was not something, which was very pleasant in the scheme of the books. So at all places, without exception, but the budget 2026 finance bill 2026 has already started using notwithstanding. So therefore, each term has its own importance. And therefore, to do away with in a blanket fashion is not something which to my mind was a very great idea. But what has happened is, I'm dutifully placing it before you, is that notwithstanding is now replaced by irrespective of. Yes, irrespective of. Now what we'll have to do is, you were saying normally, notwithstanding what is stated in chapter this or section this. Now you can't every time say that, so you would say that irrespective of whatever is stated wherever. Whatever is stated wherever, in it makes no sense to me. Say right, no. But that is how it would go about. But taking you to the dictionary meaning of irrespective, what is in Latin, or what is generally understood in respect of notwithstanding is similar to irrespective. And therefore, I don't see there is a major shift, and one need not be worried about replacing about 600 places notwithstanding. This is just, but you need to see that, that it is context sensitive. That everything what you read is to be read in the context. In Income Tax Act and for that matter any other law. If it is used at one place and therefore, there would be a uniform application, that would never be so. You'll have to read it in the context and then apply that, this is how it would go about. Now this is a major thing, see which one would like to place it before you is, right now. About 650 provisos have been removed, And what has been done is they have not been done away with, but they have been, it is the understanding of the legislature that, if we, instead of saying proviso, if we put them in subsections or even main sections elsewhere, then there is no material change in the understanding of the legislature, by exporting the provisos to the main sections and subsections. For that, and what is the objective was? That there was no other objective. It was not that they were confusing or they were creating issues, and then officers were finding it difficult to understand. That was not. The idea is that, and they have, very clearly stated in the memorandum, that, the idea is to provide a linear reading experience. Okay, this is like, you're reading some Agatha Christie or something, So therefore, it is not a piece of, fiction, or it is neither a piece of literature also, wherein the government is required to provide you a pleasant reading experience. But that is what has been the objective of shifting the proviso, because they were told that proviso perhaps will make you, if you shift them, reading is more proper. Could be, but I don't agree with this. Let's understand that what is the purpose of proviso. And this is something, it will give us a food for thought for next 2 decades to understand that where exactly we are leading to. And whether the decisions which have been delivered in and around proviso, they will hold water or they will not hold. So let's understand what is the purpose of proviso. It qualifies the main provision. You have laid down some provision, and even at the time of laying down the provision itself, legislating, you had realized as the legislator that it is not possible, to incorporate all details, ifs and buts, and therefore the best resort was that the main provision will be followed by a proviso. Whether that would either limit the scope of the provision, or it will explain the scope of the provision. And if you try to do so in the main provision, if you try to do so, this is the best of the draftsmen would tell you, that to do away with the proviso altogether is a funny exercise, and then can lead to something, which is uncontrollable. But so therefore it provides condition that I want you to give exemptions, but you please see that, proviso 1, 2, 3, 4, 5. The famous is, that you have section 32, Mohit talked about it, you have numerous provisos. The one later on is 56 to 10, you already have 6 or 5 provisos. Yes, right, because each of that lays down the conditions for the main section. Now if you were to incorporate in the main section, which you are not doing, what you are doing is you are putting it as part of subsections, right? And every time, whether that subsection has to be read with the main section is not, There is a clear understanding of the courts that in order to understand the implication of the main sections, proviso have to be read with it, which is now not so, which is now you have a subsection. So whether that is correct or not, the great legal minds only can tell you, and I am not competent to tell you. And perhaps the courts only will unfold that what is the correct meaning of this. So this is taking this further is that it avoids unintended consequences. The proviso is a safeguard even for the taxpayer and the tax practitioners. It puts you to a caution, it puts to you a notice that yes, that what I mean is this. Now, whether the proviso is expanding the scope or is curtailing the scope of the main provision is something for the courts to decide. But it puts you to the caution. And a person who is trained conservatively, he will respect those provisos. He will respect those provisos. And there are those who are adventurous or misadventurous will travel beyond the proviso and the court will decide that who is right. But today now what is happening is that I am not given any notice. It is just shifted to or consigned to a subsection. Whether that subsection by independent reading has any relevance or not, the time would decide. But in our practice, when we analyze the provisions, it will be very essential for each of us to really parallelly look for that what were the provisos and what were the meaning given to that proviso and whether that meaning has any more changed or not. So, mostly they were exceptions. Now, what is the effect of this shifting is? As I see is that yes, that these provisos are abandoned. So the concept of proviso is no more relevant, see. So whether it is Indian judiciary or the overseas judiciaries, whether that decisions would be helpful or not, is something I will put my fingers crossed. In the sense that yes, I do not anymore think that simply because a proviso was understood and was provided a meaning by judiciary, the same meaning can be imported in the income tax of 2025. I would rather hold that it will not. It will not. But those of you would like to take a different view, please take it with a caution. The same is about 500 explanations. Now these explanations were working beautifully and they were different than provisos. They were different than the provisos. The law very clearly, a draftsman understands the distinction between that. And a proviso might crop up, right from the time when the law is introduced. But when explanations are introduced, it is the admission by the government that the main provision which was introduced at a particular point of time was not serving the purpose or was not understood in the manner which it desired to make it to be understood. So therefore, explanations were later day additions to the main clauses. There would be explanation 1. Then again, government would realize that, it is not serving the purpose. So there could be explanation 2. Like section 9 has various explanations, okay, right? So therefore, the idea behind explanation is very different. Very different. It is being done with a purpose. Explanations don't expand, it explains. It explains from a rooftop that look, this is what we mean. But whether we agree with that meaning or not, it is for the courts to decide. But then, by and large, the courts have appreciated that even later day explanations which have been introduced, they have been used to understand what is the mainframe provision is. So therefore, if this is what also is done away with, and therefore you introduced it in the main provision, as compared to provisos, doing away with explanations and exporting it to the subsections, I have no particular difficulty with that, and I believe that those subsections could be read to understand this. There is no doubt about it. But the meaning which has been given by the courts to the explanations need not necessarily be the meaning which would be given to the subsections. And as I see is that all these battles hereafter Before the judiciary would be about the interpretation of this, that whether there is a material difference or not. And the difficulty is that why courts were working. Even though we know that, there were so many, huge backlog in this country, which is unparalleled, as compared to any other country. But when you see that, that precedents were working wonderfully well in this country, you would realize that, today, had precedents not been given precedence in deciding the cases, then they would have been almost double than this. Most of the cases today you would see are decided by applying some law. It is fashionable in tribunal if you go, they would say that what you are arguing is very well, but koi judgment de do na. Life becomes easier. Okay, right? No? For whom? Judge. Okay, and for me, why? Because, I don't have to keep on, playing with the same thing. This is now not going to happen. The precedents will have to provide a meaning to the precedent and map it to the main provision. Then only it would work. So these are just limited views. So there is a major shift, from 1961 Act to this. And that's why you had to remove about 500 explanations. I'm very sure that if had some thought been given, see what happens is, to my mind, those of us who have been students of law also, would appreciate that, drafting a legislation is a very different ball game. It's very different than, the bureaucratic exercise of administering a law. It's very different than the judicial exercise of implementing or explaining you the law. So a draftsman is a person who has to be much ahead of time. He is the one who is required to understand the implications. Now a person comes that, look, this is not beautiful reading. Now, but you are not in the business of providing a linear reading to everybody who wants to read it, because it is the job of the professionals, and professionals are competent largely. I personally believe that, this country is also, if bureaucrats are responsible for running this country or harming this country, it is the professionals, right, who have been very, very helpful in ensuring that some sensibility or sense is provided, to these laws. You would see that, especially the revenue laws, I am yet to see that Indian Penal Code being tampered with 10,000 times. Now in one single year after ITA 2025 is introduced, you have 100 amendments. Why do you do this? That means that, that either you are not careful about drafting, something which you felt yesteryear that it is simple. Now you feel that it is complicated. So you have started using notwithstanding. Eventually you will bring provisos, you will surely bring even explanations. So there are few things, see, if you want to walk, you have to have legs and you have to have stronger legs. In the absence of that, just because you can wear your trousers, if you have beautiful legs, that doesn't work, see, right? No. You need to accept this. I'm sorry. I hope that I'm making sense to you. Yeah, right, yeah. Then this is a major changes. What is happening is that at several places, see, it was proper for the legislator to say that, okay, as may be prescribed. So that they would prescribe it at some day. They may prescribe it at the same place in some other section. So this was working well. Now what has been, it is substituted at all places with as prescribed. Okay. Now they and the memorandum says it doesn't make any difference. It is just a decorative change. Now, those of us who are in the habit of reading English, would surely believe that 4 words cannot be substituted by 2 words. Obviously it will carry a very different meaning. And as prescribed would mean that something which is presently prescribed. And as may be prescribed as a futuristic color, that which will say that yes, as and when I prescribe, even at that point of time, this would be applicable. Like you see Rule 8D, Section 14A, and several other provisions. So therefore, this is also is a transgression with a misunderstanding that both of the terms give the same meaning. there is a material difference when you say that yes, that I am doing it only for the purpose of linear reading, providing a good reading experience, and then simultaneously you say, otherwise I mean the same thing. But that is not so. That is not so, sir. Your understanding of English is very different, and you are not in the business of drafting. Yes, right. No, and Mrs. Sitaraman cannot look into everything, and even if she wanted, she is not a lawyer by profession, so she would understand the meaning of everything. She is being told that yes, see, theek hai. It is same as it is. It's the old wine in a new bottle, but it is not so. This wine stinks. Yeah, right. But then that is how it goes about. Delegated legislation, this which I agree is good, in the sense that yes, too much of, see, amendments every year is horrible. It's terrible, right now. And it consumes, if you see collectively, all our time, in conferences, in reading, in explaining, and all that. Whatever we are discussing, actually, we will explain it to bureaucrats after 5 years. It's not going to be relevant for them today, right now. So, but then so much of time goes into this. So now what is happening is, and so much of legislative time goes into it. And that, if any institution which has the least of time available in this country is legislature. Because most of that time, paid time, is used for funny things, see, right? They keep on fighting now openly, see, right? And there is no time allowed for actually any meaningful discussion in the legislature. That's what is happening. So this is what is that, now it is delegated legislation. And what is important here is, while I appreciate that it is shifted to the people who understand the law or who are going to practice the law, there is a serious difficulty that it could be autocratically misused. It could be abused also. These powers are prone to abuse. A chairman or the member would, likely do something just to override a decision. This is what is happening in Finance Bill 2026 also. So therefore, it is, what would happen is, there is a bureaucracy into this, there is an autocracy also into this. But having done that, the safeguard is that all these amendments which they will carry out in the rules and the otherwise, they will have to be tabled before both the houses of parliament within 6 months. And if they are not approved at that point of a time, because it is that point of time where the tax practitioners, the taxpayers will have a right to represent that, yes, then there would be a debate on it. And if it is cunningly introduced, then in that case, it will be reversed. That's the way I look at it is. So there are very good safeguards in assigning the role and responsibility to the bureaucracy, for the delegated legislation. Further to that is rules, circulars, and we will see that, there would be, your rule book would be larger than the Income Tax Act in the times to come, for the reason that most of it would be rules driven. So there will be rules, circulars, notifications, and such other things. All of them we have been very clearly told, and that position does not change, that rules do not overtake the Income Tax Act. The circulars do not overtake, and they are not even binding on the taxpayers, and leave alone the courts. So therefore, in such circumstances, while rules have their own placement, their role will be enlarged, but at the same time, it will be safeguarded by the taxpayers and also the courts. Now we are into specifics. Yeah. That scope of income. Largely, we know about the taxation of income based on accrual, arising, receipt, or deemed income, deemed accrual. This is what it is. And normally it is Section 5 and Section 9 which decide. But over a period of years, you would have seen that yes, that there are many provisions which independently talk about income. Like Section 56(2) is a classic case, which is ever expanding to include so many things, correct, right? No? And each of them is a law by itself. Sometimes the care has been taken to, make amendment to subsection 24, which defines the income. I'm purposely, to tell you about the new provisions is difficult, because otherwise, we'll go haywire. But if you wish, then I'll name the number also. But other than that, permit me to refer to the old provision. Is that 224, is that, that is sometimes it is amended, sometimes it is not amended. As if this is not sufficient, right, you have on top of deeming income, you have deeming fictions also, and then fictions are also, without any restrictions or without any shame, are being introduced so liberally in all provisions, so you have so many fictions in the act. Now, unfortunately, they have been retained and we will deal with that. But coming back to scope of income is that there has always been a time difference. An income will remain an income. The scope will not change the income. Only that, it will change the year of taxation. So what would happen is that whether an income is to be taxed on accrual or when it arises, or when it is received. These are the three things over which, in the past 50% of your litigation used to be there. So it was revolving around that. So it is in general practice, as accountant, we understand it as timing difference. So now that is what has been, and there were, because, I could shift my year of taxation, that is point of taxation. We used to debate on what is the accrual, then what is the time of accrual. Is there a distinction between arising and accrual, or are they same? Then if not, at least what is received. And this, take an example of 56.210, I am repetitively taking it because it is the most disturbing provision, right? Yeah. So therefore, because it is seeking to tax an income which is not an income at all. Where would it be that, if somebody, gives you some gift, and then which law tells you that it is taxable? Mohit and you all have given me these mementos, right? The law provides that even that would be taxable, because if I aggregate it to more than 50,000 a year. So this is what it is. I remember still those days, in 1998, I'll take just a minute, it will relax us also. Yashwant Sinha was the finance minister, an ex-bureaucrat, IAS officer, in Mr. Vajpayee's government. At that time, he introduced this deeming fiction, stating that, whatever you receive will be a capital receipt liable to tax. And he therefore amended 45, 48 and all that. And at that point of time, Bombay Chartered Accountants Society, she was invited to make some representation before Mr. Sinha, who had then visited Mumbai. At that time, it was known as Bombay. So then, and he was kind to give us this. And one of our senior past presidents, he gave him a beautiful memento. Yes, right, no? And he was very pleased with that, honestly, that he was pleased that it was nothing expensive, but it was nicely thought of, And thereafter he said that, yes, sir, what have you come for? Then he explained few things. But he said the main difficulty is taxing this capital receipt. He said, what is wrong about it? He said that most of you are laundering money in the sense that gifts which are being received, from all unknown countries, from unknown people. You want to treat this as not taxable. I have brought it here. So the senior one said that, sir, that is true. But the way it is done is that, what is happening is that the memento which we gave you and the gift which we gave you is taxable in your hands. He was aghast, right? A fair man. He said that, sorry, I never thought that this can happen. He read, he read with us and agreed that yes. And that is what he dropped the entire proceeding. He did not legislate. From 1998, you can check your law books, is that 2003, there were no other. But he came again. And this time, he was guided by bureaucracy. So it is 56.2. For the first time came in the form of subclause 5, in 2003. Okay, but it was with several limitations. All of them are now removed. So this is what is the background. So here what I am trying to explain to you is that now it has been specifically explained in some of the cases that this is a receipt based taxation. You just, and when it would be known to you that when a receipt will be said to have been received, when a money is said to have been received, and that is the point of taxation, no arguments, no debate. So the idea is to bring curtains on the debate. That is what is the whole purpose. So there are not many, but then this is the defining the scope of income, I believe, is a good step forward. It provides me with a clarity. Now whether I would be taxed in year 2027 or 2030 could be a debatable issue, but law says that I will tax you in 2027. So you be prepared for that. So this confusion which the court had or the accountants had will now no more haunt the Income Tax Act. These deeming fictions, we have already talked about it. So what is important here is that this was a great opportunity. There is no change. Rather, it is, heartburn which I am presenting before you, is that there is no change. This was an opportunity to do away with deeming fictions. Deeming fictions are introduced when? When you introduce a law by saying that this is an income. This is an income. And you have 2 subsection 24 which has about 25 entries explaining what is the income. अब उससे ज़्यादा क्या करना है? लेकिन even that is not possible, you introduce a deeming fiction. By introducing the fiction, you say that something which is not an income is also an income. How could that be so? There have been some old court decisions which have upheld the power. Mind you, 56-10 has yet not under or past the judicial scrutiny that whether such kind of fictions are ever possible within the constitution and within the entries and the schedules. Right? So 50C, somewhere some high court has approved the legitimacy of these, but which is also a fiction. As if 50C was not sufficient, they came with 50CA, horrible provision. Then they came with 50D. 50D would mean कोई deeming fiction नहीं लगता है तो ठीक है 50D लगा दो. Now can't be like this, see, you can't make life so difficult, You study your law well and legislate it well. Why would you want to introduce that as and whenever the full value of consideration is not determinable, then in such case I would apply 50D, and whatever is the fair market value of the asset, that is the one I would incorporate to compute the capital gains. Now you can't do things. As if this is not sufficient, you have introduced it in 43CA also. And look what confusion this 43CA and 50C is giving. The courts are shivering. Courts are shivering, some courts said that, including Bombay. Bombay bench said that, look, it doesn't apply to any rights in land and building. 50C does not apply. But the same High Court Vidarbha bench said, Nagpur bench, said that no, it does apply. So even courts are divided. Even courts are divided. Supreme Court is divided, on one day with another day. So in such circumstances, it was the best thing to do away with deeming opportunity. And this is one thing, which I very strongly believe, that there should not be fiction. Then the issues come that fiction over fiction, whether 45.3 would apply, 45.2 would apply, or 50C would apply, or whether 45.2 apply, or whether 50 would apply. All this is, you have a fiction of 50B also. So therefore, what's happening is these fictions are something, they are pain. They are serious pain in the neck and they should be removed. But all of you should oppose that. Unfortunately, it has retained. When it suited the government, they have retained it. When it did not suited the bureaucracy, they have removed that. Residence, yes. Here the major things are that the understanding it's very important that yes, that that your residence is determined as residential status is correctly determined under the Income Tax Act. And if it is not so, most of us who don't operate from different jurisdictions have no issue. But today what is happening is that there are digital footprints everywhere. Indians have become nomads, there are expatriates, there are cross-border movements, and because of that, the rules of residence have have gained a great importance. And on top of it, see, wherever there is a confusion, then if there is a DTA application, then there are tiebreaker rules also to determine the residence. So in this background of the things, our own law of Section 6 had been creating issues that, because there is nothing like deemed residency up to few years. Now we have deemed residency also in Section 6, subsection 7. So what is happening is that when you visit a country, or when you visit this country, or when you leave this country for employment and such other things. Now the rules have been clarified. Section 6 was a basket full of confusion. Now what is happening as compared to that, what is provided in the Income Tax Act of 2025, I read it clearly. It does not give me any confusion. Yes, most of the changes which have been made are not in favor of the assessee, but what is important is it tells you very clearly that this is what it would mean. That if you are hunting for an employment outside India, and then you would say that I was out of India for the purposes of employment, would no more help. You should be outside India for employment. Now a subtle difference, minor difference, unnoticeable difference, but such differences, as Mohit rightly pointed out, is printed all over the Act. And therefore it would be foolish, for me to believe that, as has been said by the Finance Minister, that there are no major changes. Frankly, madam, there are several changes. And every time if I am going to file my return or my client's return for the year which is about to come by, that is tax year 26-27, I'll have to read that law again. And based on my years of understanding or experience, so-called experience, I might make, or I would rather believe I would make mistakes. So these rules of residence, especially in respect of these digital nomads, expatriates, and the cross-border workers. Today what's happening is, some Indian who is an Indian citizen or a person of Indian origin, he is sitting somewhere else, right? No, he is providing services to this country. Okay, whether these footprints will be captured, the person is in a bliss. These are nomads, So he is in a bliss that I have never visited India. And therefore, in such cases, say I should not be considered, my income should not be considered as taxable. One can keep on talking about this because it's very interesting. The point is that it is more likely, or it is more certain, that he is going to make mistakes. A person feels that he was in India for less than 60 days and he had no otherwise digital footprint in this country. It's perhaps is not acceptable. The point is that he will have to keep a logbook very clearly examining that what were the days on which he was rendering services digitally in India. And then based on that, his passport alone is not going to be helpful in deciding the number of days of stay or the work here. So all these things, see, this rule of residence is something which will have to be understood, because this has many props in the sense, there are issues under OECD, there are issues under BCAS, there are MLI issues, and then of course our own Income Tax Act. So my idea was limited to present it to you that that changes are happening all over, and the countries which with you do not have treaties are going to create more issues in establishing whether you are a resident or not. It's more likely that you are likely to receive a notice based on the TDS return filed by the person who has paid you the money. Then it could be captured, and then it could be said that, look, you have rendered service in India. And therefore, the person would say that, yes, sir, I have rendered service in India, but look at section, see, I was not physically present. That physical presence and the rules of residence would be very different hereafter. timelines and procedures, they have been, changed almost everywhere. The time for assessment, time for issue of notices, time for reassessment. The only where the time is not changed is the time for disposal of appeals. Yeah, right. No, yes, yeah. I'm glad at least you have responded. On a back-end statistics is, there are about 5,40,000 appeals, which has logged the entire thing. Today, tribunals have no work. All over the country, they don't have work. You file an appeal and they give you a notice. Even a city like Mumbai, within 6 days, 8 days, you receive a notice of hearing. Because and they have been told not to grant adjournment because they need work, that they have to justify their presence also. So, and this is all because of these backlogs. Okay, all offices are clogged, and I'm surprised that there is no movement, because the revenue which is locked, I was just other day looking into this is more than 11 lakh thousand crores. Okay, right, no, which has been locked into these appeals. And in most of the cases, they have not been able to collect 20%. Now, when you compare it with the budget revenue for year, you would feel that, it is much less than this revenue which is clogged. Yes, so something must be done. And why it is not being done, God alone knows, right? No, faceless has not worked, right? No, because they believe that the faceless is not working for those commissioner appeals who believed that, by becoming commissioner appeals, it was their first opportunity to do something for themselves and not for the country. So which opportunity is taken away? I am not afraid of talking clearly, because even a small office like mine, see, we have about 200 appeals which are locked. So now that is something it affects the mindset of the person. It doesn't allow me to sleep also, And what happens is, one notice comes, you submit, yes, you scan 1,000 papers, you submit everything. Within 3 months, after 90 days, another notice comes because somebody over there has not passed the order. And their internal guidelines say that if orders are not passed within 90 days, then you have to hear the assessee once again. So, फिर से notice देता है. I have some cases wherein, I have been numbering. Now my office sends submissions every time by numbering that. So we have yet reached about additional submission number 8. Now you can think, and this has started right from COVID times. Yes, right, no. I was foolish that I felt that during COVID time, if I attend my office and digitally work, all these faceless will help me. So then, I was dutifully drafting all submissions without the support staff. But today also no orders have been issued. No orders have been issued. But coming back to these timelines and procedure is that here that timelines are tweaked in favor of the minimizing the time which is given to the officers for the purposes of passing orders, for the purposes of reopening, for the purposes of issue of notices. And so therefore I would believe that, that these timelines, which are changed are for good. They have also provided timelines for issue of show cause notice and for the passing of orders after receiving the reply to show cause notice. So therefore the government means business. At least the legislature means business, and I am happy about it. Tax year. This is one thing, which is surely not decorative or ornamental. Which is not surely decorative or ornamental. This is a systemic shift, from the present times, and we are at the threshold that we are just about to shift from the concept of previous year, from the concept of assessment year to the concept of tax year. So what would happen is now AY will no more be used. Your notice will always inform you, or return will also inform you that you are filing a return for tax year. And what is that tax year? Tax year happens to be the maximum period of 12 months. Maximum period of 12 months, commencing from 1st of April, no matter what you like, and ending with 31st March. It can begin in between, but it will end nonetheless on 31st March. The only exception would be that when an assessing officer is of an opinion that you are about to dispose the assets, and run away from this country, or about to dispose the assets and, and siphon off the money, only in such circumstances he will have a power to shorten the year, which will end before 31st March. Other than that, in all such cases, now there is a goodbye to previous year, there is no previous year. Tax year is the same as financial year. There is no assessment year which was always walking 1 year ahead of the financial year. And it was found to be confusing. Internationally, this is an adopted practice that, the financial year could be different. Like US would follow calendar year, some other country would follow some other year. But importantly is that for us, it will be the financial year. And based on that, the tax year is determined, which is the same as financial year. So all your assessment, returns, appeals, notices, everything will be now with reference to tax year. So this, I believe, is a good step forward because it is easier to understand. There is no confusion between assessment year and financial year, because whenever a new client comes who has no background of filing returns, you always have to explain to him that this is different. And many a times, even in our office, we make mistakes like writing about a wrong assessment year. And instead of that, the office writes previous year, though it is recorded as assessment year, but the new people who join in, they have no clear concept of difference between assessment year and the previous year. So now all that would be, I believe, the mismatch issues and other things would be over. It is tax year, it is financial year. The income accrues in that year, income tax is being taxed in the year. If it is not so, if the income is received in that year, it will be taxed in that year. It's easier for you also as a businessman to calculate your tax liabilities and also understand your responsibilities. Even reporting periods for the accountants also would be more clearer. Yeah. Now these penalties, when I am talking to you, I would be talking to you. Understand, and it drives home the point most succinctly, that the laws, tax laws, revenue laws are dynamic and cannot be changed, cannot be static or stable. And it will be incorrect to even expect that yes, that they would be so. The reason is that penalties, have been incorporated in 2025 Act. Let us say that they have been incorporated for the first time. And there are almost 60 areas in which penalties have been provided for. Now, in 2026 Finance Bill, this law is supposed to be changed, and supposed to be changed in a huge way. Now the law which Kincha will discuss with you is that, that now law seeks to change the entire concept of penalty and the passing of orders. It seeks to pass the order along with the assessment order. He will also explain to you that now some of the penalties are shifted to fines. Okay, and they carry very different meanings. So I don't want to continue. I'm just explaining to you that the law of revenue would always remain dynamic. So therefore something which has been introduced just the yesteryear now will be changed materially this year or with the coming year. But what are the penalties? What is the shift between 1961 and 2025? Let's understand that in respect of technical disputes, there is a tacit admission that what penalty is being levied is not correct, the quantum of penalty, and therefore there is a across the board reduction in the amount of penalty. So which I believe is a welcome change, right? Then similarly, especially in small taxpayers or MSME cases, and even in some bigger cases also, where disproportionate penalties were being levied, they have been done away with. Especially in these, that, that if the quantum of penalty was, though 10,000 or 25,000, if it was disproportionate with the offense which was committed, they have been done away with in 2025 Act. Carrying it further is that at the same time, new reporting obligations have been introduced in respect of VDA and other transactions. So in such cases, what happens is, because there are reporting obligations, there are new penalties which have emerged. So there are about 10 to 11 such provisions which have been introduced only to ensure that if a person fails in reporting in time, then in such cases there will be a penalty. So these are new penalties which have been introduced. Maybe they might have been introduced in 25 or in 24, but the flavor of the thing is that they are being introduced for non-reporting. The difficulties are because most of these penalties also are in faceless regime. So this regiment has its own difficulties also. They would be automated. Yes, that there would be no hearing about these penalties. And somewhere some machine decided that there is a default. Then in that case, bypassing the need to be ascertaining whether there was a reasonable cause or not, there will be a penalty. So this is the difficulty with the automatic platforms, and also digitalization of implementation of law. So this is what is something which is going to remain with us. Finance Bill 2026, there are major amendments in penalty and prosecution. So I'll advise you to listen to him very properly, because he is one of the best professionals. So we will introduce you to many things. And don't insist that, that he should complete everything. He might start with one thing, and if he likes it so much, he might take 2 hours just to explain to you that. But then at the same time, every minute which he would take, he will share something with you. So this is something, so you may try your best, say, right. Deductions and exemptions, yes, what has happened is that there were scattered provisions all over. Yes, thank you so much. Yeah. He understands my precedent. I have no sense of time. Right. So, but the gentleman who will follow me, he has absolutely no sense of time. So don't worry about it. But good thing is that all of us mean well. See, it's not that one likes to keep on talking. It's that something which we have begun, it should be explained properly, so that you don't have to come again to understand this. Okay, but 15 minutes or maximum 20 minutes, I'll complete it, yes. I'll speed up the things, see, right, yeah. Now that bullet trains are being introduced, yeah, right, no, so we all need to learn about it. Very well, yes, yeah, right, very good, yes. In fact, it would be good that, a time should come where under, law should be such that it doesn't require any explanation at all. It doesn't require meeting, conferencing, writing books, see, it should be, but it can never be so, it can never be so, right? Yeah, so this is that a lot of things are pulled in schedules. You had exemptions in section 10, 10A, 10B, elsewhere, right, no? Now all of these are placed in schedules, and even in schedules there are tables which is distinguishing income-oriented exemptions from expenditure-oriented exemptions. So this is one thing which we will notice about it, which is, I believe, is a very good thing, because it makes a pleasant reading. There is no doubt about it. And I can source everything at one place. It lays down the rules of exemptions also. So therefore this is one. Things like gratuity, leave encashment, voluntary retirement, compensation, pension, all of them are related to the head of income, salaries, and they are now grouped at one place. So it's easier to understand. You don't have to travel from one rule 3 to another rule 3.8 or something. So all of them is put under one place, which is good. There is the higher deductions or the better quality deductions are provided in respect of donation and interest. Yeah, so that is now more clearer. So there is no confusion. Otherwise, ATG At times, even after giving donation, you had trouble in computing what is the quantum of donation. Whether should it be 10% of the gross total income, and thereafter should it be reduced by 50%, or should it be 100%. All such things, I believe, that can be very well read into the new provisions, and therefore there will be no confusion. Then some formulas are also provided that how exemption is to be computed. Now, you were told that house rent allowance ऐसा दिया जाएगा, but you were never told that, what we mean by this. We have just given you in sentences that this is how you should be computed. But I am still in confusion that how to go about the list of the 4 components. So therefore, now it is very clearly provided. You may differ with that. You may agree or not, but this is what is meant. And now that is not a rule. Now it is part of the act itself. So therefore the judiciary will not interpret it differently. It is approved by the legislature, and that is what would be the understanding of this. Then there are tables which have been given, very extensive tables which have been given. And they also, I find them to be very helpful. That even in budget, you would see this time, they have given tables for TCS and also prosecution and other things. So tabular way of presenting the things is far more simpler. It depicts and conveys things in very precise manner, which at times is difficult to explain even in English, while you write that. So this is one thing, say, right? Reduce, and it has reduced duplication. It has reduced duplication, so which is also very important. Charitable trust. This 2023, they made some major amendments. 2022, they made. 22-24, they made some amendments. As if this was not sufficient, it shows that the fickle mindset of the people who do this. In 2025, ITA 2025, which we are discussing and we have gathered here to discuss that is, there are few major amendments. Okay, and just let me brush through them. That now there is a clear-cut mandate that exemption is possible only for a non-profit organization. And what is a non-profit organization? There are 11 categories which have been listed. And some of them could be even government organizations which blissfully believed that they were not required to be registered at all. Now they have to be first be considered as NPOs, and they will be considered as NPO for the purposes of Income Tax Act only if these NPOs are registered. These NPOs are registered. So this is one major change, that I should see whether I am an NPO, and the other one is whether I am a registered one or not. And now you have these registration norms, which holds valid for 5 years. Now it's extended to 10 years. So ये सारी बातें आपको देखना है. So but the list is now expanded. The second is that, very specifically eligibility criteria for registration is defined. If you do not satisfy that, you perhaps would not get the registration. Earlier what was provided is that a charitable institution can apply for registration. But what should be the norms of registration? One was not sure. You were told that, in what circumstances your registration could be cancelled. In what circumstances it could be rejected application. But now you are very clearly told that if you want to be registered, these are the conditions which you will have to fulfill. Then next is that your registration should be the one with the Indian institution, Indian authorities. If you are registered charitable NPO in some other country, that will not work here. Why this is done is that, in some places, see, some courts have taken a view that so what, it is not registered under the Income Tax Act. As long as, it is a charitable institution which is registered elsewhere in a respectable country, then in such case, you should proceed with the same thing, which is now not working. Then there is a tacit need. Today this is happening in a very wide manner, at least in the Bombay jurisdiction, is that if you spend some money, for objects, say, which are philanthropic, there is no doubt about it. but which is for expenditure which is undertaken for some foreigners or for, in a place which is out of India, then in such case, the registration applications are denied. Even if your object clauses are providing for such objects which permit you to spend money for charitable objects outside India, then at the threshold only it is rejected. And in many cases, registered trusts are denied registration. Their registration is cancelled. And in many cases, the tribunal benches have taken conflicting view. Courts have taken a conflicting view that if Kerala High Court is a classic case, wherein a view has been taken that, if you have spent money outside India, there is a problem. As against that, the Bombay High Court in Oxford University's case has taken a view that as long as it is charitable and you are registered, there should not be a difficulty. But this confusion now will not be there. Now that confusion is dispelled, it is very clearly provided. Yes, that it is very clearly provided. Somewhere else it is provided that if you need to spend money nonetheless overseas, then you come to us. Then you come to us, and then if we approve that, then you can do so. So that relaxation is provided, but it's a bureaucratic relaxation that you will have to keep it in mind. The major shift is also that so far we were told that Section 11 is an exemption provision. Yes, that your income is not taxable, it is exempt. Arithmetically decide. It will start from 100 and come to 1. After computing it, and it is computation provision which will stick. It's no more interested in granting you a blanket exemption with reference to your status or registration. It's computation provision, and it is income which is computed. That is what would get exemption. It is not the person who is eligible for computation. And this is also a major shift. We had two regiments, like we had new regiment and old regiment for the purposes of return of income, computation, deciding total income. Here also we had regiment of 1023C and Section 11 regiment. And both of them were having a simultaneous journey, but both of them were there. Now all these regiments are merged into one section. If there is an exemption, if there is a registration, if you are an NPO, whether you are an university or a medical institution or a hospital or an educational institution, you are under one NPO. That's what it is. And even government organizations are required to be NPOs first and registered later on, before they ever claim an exemption. Continuing with this is that, this is one good thing is, right. Today what is happening is, if there was a delay in application for registration, two things happen. One, your application for registration is rejected. Yes, right. And the second is immediately back to back, 115 TD, which is one of the most obnoxious provisions, would get automatically activated. Now what is happening is that if there is a delay in application, that TD will not be activated. TD will not be activated, and which is a big thing. TD is something like 45.4. It is something like 9B. Wherein the difference between, many of you may not have read this, but it is most dangerous provision is when a charitable trust registration is refused or it is cancelled, the difference between the market value of the assets and the cost of acquisition of that assets would be taxed at the maximum marginal rate. This is what is the provision, and whom are you taxing? A charitable trust who is otherwise doing the work which Government of India should have been doing. Okay, so that is one. Now it is explicitly provided. There had been lot of case laws to finally decide that, that Section 11 does not recognize Section 14, meaning that there are no heads of income in computation. So now there is a very clear-cut provision that heads of income would not apply. I'll go further. There is also now a clear-cut thing that, you know about the objects, charitable purpose. One of them is general purpose utility or general public utility, shortly known as GPU. So now it's provided that if it exceeds 20%, your commercial activity of a general public utility, you might lose exemption. Very clearly provided. So you don't have to now debate whether it is a charitable purpose or not. Now there are three types of income in charitable purposes. There will be regular income, which all of us know about. Then there will be a specified income, which will be different than the charitable income, which will be deemed income of a charitable trust in certain specified cases, which will be taxed at a different rate than the regular income. Regular income is exempt. Specified income is the one, if you provide for accumulation, then in that case you may still not be taxed, but it is differently classified as specified income. And what is not a regular income and what is also not a specified income is a residual income. So different rules of taxation have been provided, different rates of taxation have been provided in respect of this. This is a unique addition, so please look into that. Then we have the concept of accumulated income and a deemed accumulated income also. The accumulated income is required to be invested under 11.5. And the deemed accumulated income is required to be spent at some point of time. Because it is a deemed income, it cannot be invested. There is no cash flow in respect. So now it has been clarified that these two things are very different. And the investment rules will not apply to the deemed accumulated income. And now that purpose of accumulation will have to be specified. Many of us thought that if my accumulation is in synchronization with the object clauses, and I have 4 different objects, and any one of the objects, if I pass a resolution that this is accumulated for the purposes of objects of the trust, that will not do anymore. You will have to be specific about it, and you will have to specify each of the purposes. You may still say that 10 lakhs is for education, 10 lakhs is for medical. But if you say it is for the objects of the trust, generally, that may not help. Okay, I'll speed up. This is the materially important thing is that, the search and seizure, 2 important things we have to understand in relation to this is that now the authorities will have access to all digital footprints, including the cloud in your organization. That is the place where they visit. Second is that if they are locked, then they have the power to obtain the passwords also. Yeah, if you do not give the password, they have a power to, loosely saying, they have power to open them by hacking or otherwise. So therefore you cannot keep it anymore hiding that mere cell phone mein ye protected hai. And then there are cases which say that this is an invasion on privacy, you cannot do so. Reason is that they are not my books of account. My mobile is not my books of account. Some rough records I am maintaining on a cloud is not books of account. All this is now done away with. So keep that in mind. Anywhere, anything, if you feel that there is a digital presence of a particular recording, it will be accessible, to the search authorities, even to survey authorities. They may be in many cases treated as books of account, and then they can be impounded also. And the last and most important is that it will be used as an evidence. You have famous cases like Birla cases, Sara cases, all this, and Advani cases, wherein it has been said that, these cheats are not books of account. And something which is written in that, that cannot be, unless the onus or the obligation to prove that it represented income was not on Mr. Advani, it was on the Central Board of Direct Taxes, which is now over. So therefore, you should be careful that, that wherever you create some footprints, You should be careful that this is the sum and substance of I am saying. There was a lot to those. Faceless schemes, yes, we have talked about it, but now it is time for any one of us, be that my age or anybody other age, you need to be very conversant with the faceless scheme. And one important thing which is noticed is two important things. One is now it has a statutory recognition, that's one. And second is now it is mandatory to give an opportunity of hearing. Now, opportunity of hearing could be physical or virtual, that will be decided by the authorities, but any order passed without an opportunity of hearing in a faceless jurisdiction is something which will, earlier we used to take recourse to natural justice violation. Now there will be a statutory violation, so we'll keep in mind. Digital era, I have talked with you about this, permit me to move, There is a harmonization. See, the BEPS is something, see, there is base erosion of profit sharing, So and that was a concept, which was monitored by or introduced by the OECD. And we have been working very differently. But now there is an acceptance that all that what is happening under BEPS, now we becoming part of G20 also. So therefore what is happening is that BEPS, MLI होगा कि pillars होगा, वो धीरे धीरे income tax act में accept होता है. Why I am highlighting this is not to tell you about that, is to tell you that all this is finding statutory recognition in the Income Tax Act of 2025. Right? When all your explanations of section 9, and there were about 14 such explanations, they have now been merged into the main section. So therefore, gradually, something which was sought to be achieved, is being achieved. And therefore, all those decisions, including the Morgan Stanley's famous decision on PE, could be of a persuasive value. But because now business connection is expressly defined in the Income Tax Act, not as an explanation, but as the Act itself. Therefore, there is a possibility that, yes, that it would be reread differently. Anti-avoidance, dekho, GAR ko they have retained, see, right, no? And some of you may please look through these slides, if there is anything, because I am rushing, you can write to me and I'll surely respond to this. My apologies. GAR is retained with a change that now, if there is an absence of commercial substance, he has a power to invoke, the authorities have a power to invoke GAR automatically and ignore this particular thing. So that even if there is a commercial substance, but if other provisions, this is also simultaneously happening. So in such cases, it would be possible to invoke GAR. Dispute resolution is one thing which we are happy about, is that, besides DRP, now that DRC is also, Dispute Resolution Committee is also introduced for settlement of the smaller disputes, minor disputes, which are relating to smaller taxpayers, MSME cases also. Right, yes, yeah, I'm moving. Mohit, only in that case, you will have to permit me to move out of this. Yeah, it should be all right. I have listed several decisions and there are about 15 of them. Each of them have been judicially noted that what is happening in respect of these decisions. Because one of the part of my assignment was to share with you that what is the impact on the landmark decisions which have been changed because of Income Tax Act 1960 translation to 2025. These decisions are cited, I have listed them, and what is the impact of that also is recorded there, so should not be a difficulty for you to understand. What I need to share with you is, that is what is the basic thing, and if we appreciate this, the rest of the things will go away. I'll take 2 minutes on this. These judicial decisions we are set about to discuss are the decisions, which are evolved over a period of time. And in delivering the decisions, the courts have developed their own understanding of the law. It is not the simple English which has been interpreted, or you have been told that what the law is. The courts have, over most of these 90% of these decisions, have told you that what the law is and what is their understanding of the law and what should have been, the interpretation of this law. Now, when you seek to do so with a set of act which has very strict specific formulas, tables, and very simple language. Now, in such cases, it is possible for the courts to say that why have you come to us? There is no substantial question of law involved, which can be addressed to by us. So what would happen is that, these disputes will travel more up to tribunal, and beyond that, the courts will refuse to understand this. They will say that only when the issue which has come before them is involving a substantial question of law, based on which requires interpretation of the provisions. As I look at it is, that it may not be so very easy now to run to the court at every single drop of hat is something, if we understand this, that is one thing we will appreciate. Second is whether all these decisions will otherwise also will be helpful or not. I'll say that, that there is no automatic rule that yes, that all decisions delivered under old act would necessarily apply to the computation of income or rights or duties under the 2025 Act. The best is to map each of the sections. If you're comparing section 28 with another section of business income, you will have to see whether the language is same, whether there is any confusion surrounding that. If that is not so, the old law may not help you. See, right now, whether there is a particular, now when the law very clearly says that this is a business income and this is a capital gain, then the courts will not want to look into this, that whether your actions could be construed or be interpreted to mean the presence of a business or otherwise. So this, if we understand, so that the second rule is that there is no automatical application of law. Likewise, there is no automatic disqualification of the precedents also. These precedents may apply, but the fourth rule is that they will apply only in such cases where the language is para materia same. If that is not so, most of these decisions which have been delivered under the 1961 Act, that is the last, you will see that they have been delivered on the basis of the purposive interpretation of law. What had been the purpose behind enactment? What has been the intention of the legislature? As against that, you would see that 2025 law does not deal with that. And with this, ladies and gentlemen, I thank you, very much for giving me a patient hearing and an opportunity to share my thoughts. Thank you so much.
Thank you, sir. Thank you for a very, very detailed and a critical presentation covering majority of the issues under the Income Tax Act 2021, starting from definition, transitional provisions, dispute resolutions, GAR, many more. So we, in the interest of time, will not be able to take questions now. We will take questions during the course of lunch. And thank you very much again. Thank you to all the participants, all the past presidents for joining here. Now I request you to please join us for lunch.